Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the webinar conducted by NGEN Markets. By the time the others join in, let's have a look at today's webinar topic. So today we would be focusing upon how you could analyze and onboard and custom security onto the platform and run a portfolio analysis on the same. So firstly, we would be looking how you could onboard this custom security onto the platform. What you would be requiring would be two columns in Excel, date series being the first column and the price levels being the second column. If you have these two columns, you could onboard any custom security onto NGEN Markets platform. Post which, what we would do is create a portfolio including this custom securities. So we have an option in the portfolio section wherein you could add in mutual funds, stocks, and along with these two, you can also add in custom securities that you have created. Finally, we would be looking upon various performance parameters such as risk versus returns, how has the portfolio performed against its benchmark, wherein we would also see how you could create in your own customized benchmark, meaning addition of 2 or 3 benchmarks together, giving each benchmark a different allocation and creating a composite benchmark. Finally, the quorum would be open for a Q&A session. You could either unmute yourself or type down your questions in the chat box. So let us begin. Now, this is our NGEN Markets landing page. The Markets tab happens to be the landing page. For our topic related webinar, I would move towards the very last tab, which is the My Securities tab. Now, this is a section wherein you could add in any non-standard, for that matter, any custom data onto the platform. Maybe a data like gold, silver, or any other commodity type of data onto the platform. For that matter, let's say a foreign stock or an unlisted stock, which you wish to analyze, you could onboard it onto the platform from this My Securities tab. Now, right here, there are 2 columns or 2 data sets that would be required. First would be the date series, and second would be the price series. Now, we also have provided an example file in this My Securities tab itself. Once you click on this, you will be able to see how and in what format do we require the data. So this is how the Excel opens up. The first column is the date in the respective format. Next to it is the price or the levels. All you need to do is copy this entire data and paste it in this white colored section. Simply do a Control-C, Control-V. The data has gotten captured right here. Next is you need to give a label to this security that you've added in. For example, for the time being, I'm just adding this as example November 2024, post which you need to select a specific asset class. 3 asset class we have mentioned right here: equity, debt, and others. You could select either of these 3. Let's say for now I select others. And next, you need to simply validate this data. Once you click on validate, you will see on the right-hand side, the price momentum of this security has shown up. You can also see that there has been a total of 3,495 data points in this Excel that we have uploaded, with the start price being at 5,200 and the end price, the last price that we have uploaded, is at 18,500 odd. Next, what you need to do is simply click on save to ensure that this custom security that you have added in the My Securities tab gets saved. Now, this was just the example file I uploaded that was available in the My Securities tab. Let's say now I upload a gold price momentum onto the platform. So simply click on this plus icon. The page gets refreshed. My Securities page gets refreshed. I have in an Excel sheet the price series of gold for the past 3 years, meaning starting November 2021, I have it till November 2024. All you need to do, as I mentioned, is copy this data, do a Control-C, paste the data right here, give this file a name. So I've added it as Gold November 2024. I'll select the asset class as others and I'll hit on validate. Once that has been done, you could see the price momentum has gotten captured right here. Again, giving you the data points that there is a total of 784 data points with the start price at 48,700 and the last price, the last level at 76,000. Next, you simply click on save to ensure that this security that you have created gets saved onto your login. Now, once it gets saved, it will start reflecting in this left-hand side section. There are two ways how you could locate any of the security that you have created. Firstly, you can do a simple keyword search right here. So the one that I had selected was this one, created was this one. This is the first method of locating the security that you have created. If not, you can simply collapse all the folders. Once you have collapsed, others was the asset class into which I had saved gold as a security. I'll simply expand this folder and this was the security that I just created. Simply do a left click to go forward with a price momentum analysis on this security that we just added. Right here, what you could see is the performance of gold as a security against that of Nifty 50. Now, by default, in the My Securities tab, the benchmark that gets selected is Nifty 50. You could anytime change this benchmark as per your preference. Now, in this graphical representation, the blue line shows the performance of gold and the black line is showing the performance of Nifty 50, which is currently the benchmark. And if at all you see, you could see that these are the rebased price. Now, what do we mean by rebased price is simply, I'll just go to the starting point or the first point of the data set. You could see both Nifty 50 and gold's level is starting from 100. So what we do is rebase the price of both the security as well as benchmark to 100 so that we could have a fair graphical view, fair graphical representation of the data that we are looking upon. Now, clearly looking at this graphical data, we could see that gold as a security has been performing better or has given an outperformance against Nifty 50 as a benchmark. Now, as I mentioned, this was rebased levels that you were seeing. Let's say you wish to see like the actual levels, you could anytime click on this checkbox for actual NAVs and it will start up from their respective levels. Right here, you could see they are starting from their respective levels. Post which, this graphical representation data could also be seen in a statistical format too, which could be seen on this right-hand side. For example, the cumulative return, meaning the absolute point-to-point return for gold as a commodity happens to be 57%, while for benchmark, it comes up to be 34%, which is Nifty 50. Now, what was the risk that was undertaken? You could come to this annual volatility. Standard deviation, meaning it says 11.6 is the risk taken by gold and 14% is the risk taken by Nifty 50. Meaning in this time period of 3 years for which I had input the data, it is suggesting that gold has performed better in comparison to Nifty 50 and at the same time is generating considerably lesser amount of risk than the benchmark, which is Nifty 50. Due to its outperformance, you could clearly see right here, excess generated over the benchmark by gold as a security happens to be to an extent of 23%. Now, this was the performance statistics that we were looking upon. Let's now move on to beta. Now, beta lets you see how riskier a specific scheme is when we compare it to that of the benchmark. Now, benchmark has a beta of 1 with itself and a beta higher than 1 says that the scheme is more riskier than that of the benchmark, while a beta lesser than 1 highlights that the scheme happens to be less riskier than that of the benchmark. Now here we could see that beta of gold with Nifty 50 is negative 0.04, meaning there happens to be an inverse relationship between Nifty 50 and gold as a commodity, which states that when Nifty 50, or for that matter, the equity market happens to fall, the levels of gold or the price of gold happens to increase. That is what we could clearly see from the beta that has been mentioned right here. Now, this could also be used as a tool for diversification on a portfolio level as well, meaning you could create a portfolio of equity mutual funds and also add in gold as a commodity in your portfolio, because right here we could clearly see that equity market and gold as a commodity happens to have an inverse relationship that way, or for that matter any gold ETF which maps the performance of gold as a commodity can be a part of your portfolio in order to ensure diversification of your entire portfolio that way. Next, we move on to the scenarios tab. Now, this is a section which lets you create in customized scenarios of your own. All you need to do is click on Add Custom Scenario, give in a name, and put in a time period under consideration. So let's create a scenario. We all know in the month of October 2024, the equity market was rather in a bear run. So let's see how did gold have, what was the movement of gold during the time period when equity market was moving down. So I'll add in October 2024. I'll put in the start date as 1st October till 31st October, and I'll simply save this custom scenario, right? So this has gotten saved right here. All you need to do is do a left click on this scenario, and we could see how has the security gold performed against that of Nifty 50. So the start date and end date gets reflected right here, which is for the month of October from 1st October till 31st October 2024. Clearly, in the graphical chart, we could see that in the month of October, Nifty 50, or for that matter, equity market was rather falling down. And in the same month, we could see there's an inverse performance, or a rather total opposite performance by gold as a commodity that could be observed. When equity market was falling down, gold was rather going up. That can also be seen in terms of its absolute return that has been mentioned, which says Nifty 50 gave in a return of negative 6.17%, while at the same time, gold generated a positive 5.28% return, which in turn gives an excess return of a positive 11.45%, clearly validating the point that we saw in beta, which stated that when the equity market falls down, since there happens to be an inverse relationship with gold as a commodity, gold moves up. Now, this was something that we were viewing for Indian equity market. Let's say we try to change the benchmark and set it to maybe US market, because there was an election that had come up in the month of November in US. So let's say I simply go to world and I'll select NASDAQ right here. And we can check how did gold as a commodity move when there was election in US. So I have selected NASDAQ from this section right here. Next, I go to the scenarios tab, and the process remains the same. Simply click on Add Custom Scenario, put in a name, put in a start date. Let's say I'll take from 1st November till 21st November 2024, and I'll click on Save Custom Scenario. It has gotten saved right here. You simply do a left click. So in the month of November, starting from 1st November 2024 till 21st November 2024, we clearly see right here that US market was rather moving up during the election period. And at the same time, gold as a commodity was rather not able to catch up with the US market, or rather it was falling down. You could clearly see the returns for both. NASDAQ had a return of 4.02%, while gold as a commodity had indeed a negative return of minus 3.35%. And because of that, you could see an excess negative alpha has been generated to an extent of negative 7.37%. Now, this was the price momentum analysis of gold as a commodity that we saw right here in the My Securities tab. Such analysis could be done for any other custom security that you onboard onto the platform, which we call as price momentum analysis. Now, let's say you rather wish to create a portfolio of maybe mutual funds, stocks. Along with that, you also wish to add this gold commodity to that specific portfolio. That as well is possible on our platform. You simply go to the portfolios tab. In the portfolios tab, you could see a plus icon on the top. Add a new portfolio. Right here, we have given an option. Either you can add a fund, add a stock, or a custom security that you had created in the My Securities tab. So let's say I add in few funds. Let's say I'll add in iPro Blue Chip. Next, maybe Parag Parekh, Nippon Small Cap from the small cap category, and maybe a mid cap fund. And let's say I also add in a stock. I'll add in Infosys Limited. And again, this last security that I just created, Gold November 2024, simply do a click on that. So these have currently gotten added in. Let's say for now, I equally allocate these portfolios, these funds or schemes in my portfolio. Next, what you need to do is give a name to this portfolio. Let's say I'll highlight this as, again, here you could see an option to save portfolio in various folders. For now, I'm selecting active. You could select any other folder that you have created and make sure it gets saved into that specific folder. Next, you could see there are two options, create and run. If you click on run, you would be able to see a portfolio analysis, but the portfolio will not get saved onto your login. So the right way going forward would be to click on create to ensure that your portfolio gets saved onto your login, post which you could simply click on run to go forward with a detailed portfolio analysis for the same. Now, this is our portfolio that has gotten loaded with the 6 schemes that I just added with their allocation, which is currently equally allocated to an extent of 16.67%. Next to that, you could see this start and end date as an option. You could simply change the time period for which you're analyzing the portfolio for. All you need to do is click on change. And let's say we analyze this portfolio for the past 3 years. You can simply click on 3 years ago, or for that matter, if you have any custom date in mind, just click right here in this gray section and select a time period of your choice. For now, I'm selecting this as 3 years ago. So you could see the start date has gotten picked up automatically, which is the last 3-year time period under consideration. Post which we go forward to view the performance of this portfolio against the benchmark. In this graphical representation, blue line is showing the movement of the portfolio and black line is showing the movement of the benchmark. Now, what is the benchmark that is used for consideration? It is mentioned right here, reference index 1. Now, this is auto benchmarking that happens on the platform. Now, if you wish to know what does reference index 1 stand for, you could scroll up and go to this benchmark column. Right here in this engine section, you simply click in this gray section to search the reference index. Now, reference index 1 stands for 100% Nifty TRI. Now, as I mentioned, this is based on the asset allocation of the entire portfolio. This is how auto benchmarking works. Now, I simply go to the asset allocation. You could see the split in terms of equity and debt. Based on that split, The platform is currently suggesting reference index 1. You could either go forward with this auto benchmarked index. If not, you could go forward with any other benchmark for that matter. If you wish to benchmark it against any broad based index, you could anytime do that as well. Now, let's say I go and rather see how has this portfolio performed against this auto benchmarked auto benchmarking that has happened for this portfolio. So in the graph, we could clearly see that there has been an outperformance by the portfolio. And you can also view that in statistical manner too. Right here, cumulative return, meaning the absolute point-to-point return, happens to be 62% for the portfolio and 39% for that of the benchmark. Next, what was the risk that was undertaken to generate this return? You could view this in annual volatility, which is the standard deviation. 11% happens to be the risk of the portfolio and 13% happens to be the risk of the benchmark. So you could see that the portfolio generated a better return with a lower level of risk in this time period of 3 years that we are analyzing. And that could also be seen in terms of its Sharpe ratio, which is the risk adjusted return. It is at 0.87 for this portfolio and 0.38 for the benchmark. Followed by that, if we scroll down, you could see monthly statistics on the left and yearly statistics on the right. Now, if you look upon the monthly statistics, right here, number has been mentioned and it says 37. This 37 is equivalent to the total number of months from the start date up until the end date. It says that in this time period of 3 years that is under consideration, there has been a total of 37 months, out of which 24 months your portfolio gave in an up performance, while 13 months this portfolio gave in a down performance. If we consider the 37 months to be equivalent to 100%, out of these 100%, 64% of time this portfolio has generated a positive return and 35% of times the portfolio has generated negative or had a down movement. You could anytime locate the best performing month. 6.85 was the best return that was generated by this portfolio on a month-on-month basis. And at the same time, negative 3.60 was the return that was the worst that was generated by this portfolio. You could anytime locate that on this line graph as well. You could see in the month of July 2022, 6.85, which was the highest return that was generated by this portfolio. And the worst return was May 2022, minus 3.6 was the return that was generated during this month. Now, this was the performance analysis that we were doing for this portfolio against the reference index 1. Now, let's say you wish to create your own customized benchmark. That is also possible on the platform. All you need to do is go to this benchmark as a column, click on custom, and click on manage custom indices. From this list of benchmark, you could add in multiple index, give each index a weightage of your own. Now, let's say I rather wish to create a custom benchmark based on its large, mid, and small cap split. So where do you find that split is you go to the asset allocation. In the asset allocation, we have this contribution tab. Within the contribution tab, you could see equity market cap exposure. There are two drop downs as of which you could see the equity market exposure. First is as percentage of total portfolio, meaning you're considering the total portfolio exposure to be 100, out of which it says 44% exposure comes from large cap, 16% exposure comes from small cap, and 13% exposure comes from mid cap. And everything other than the equity exposure comes up in this pie section, which is equivalent to 26%. This is as percentage of total portfolio. We also have a toggle which says as percentage of equity exposure. Under this, we consider the entire equity exposure to be 100%. Based on that, we show the split in terms of large, mid, and small cap. So I'll just note this down. Large is equivalent to, let's say, 60%, small cap to an extent of 21%, and mid cap to an extent of 19%. All you need to do is go to customs, click on manage custom indices. From this respective drop down, select the benchmarks that you wish to add. So I've added in Nifty 100. I'll add in Nifty midcap 150. Simply click on add index and also a small cap. So I'll select Nifty small cap 250, click on add index. Once these have gotten added in, I'll give in each benchmark a allocation of its own. So 60 to Nifty 100, to mid cap it's 19, and 21 is to small cap. Once that is done, ensure that it is coming up to a percent of 100 as an allocation. Then all you need to do is give a name to this benchmark. And click on Save Custom Index. Once that is done, within few seconds, this index gets added to this list on the left. Right? So it has gotten added right here. Now, how do you benchmark your portfolio against this custom benchmark is pretty simple. Go to this benchmark section, click on custom and search for the benchmark that you just created. So click on this custom portfolio index. That was the name that I had given to the custom benchmark that I had created. Then I simply go to the performance tab, and here you could see you are seeing the performance of this portfolio against the custom benchmark that we had created. Next, after the performance tab, we move on to the risk versus return scatter plot. Now, this is a scatter plot wherein on the x-axis, you could see annualized risk, meaning standard deviation, and on the y-axis, you could see annualized return. And the entire scatter plot would be divided into 4 quadrants: low risk, high return, low risk, low return, high risk, low return, and high risk, high return. Now, currently, you're not able to see the name of any of this scatter plot that you're able to see on the screen. You simply hover on those plots and you could see this scatter plot is denoted for HDFC Midcap, mentioning its risk and return. However, if you simply do a tick on this checkbox, the labels for these respective schemes come up accordingly. Now, if we look upon this scatter plot, if any scheme gets plotted on the right-hand side of this scatter plot, those would be the ones which have higher level of risk in comparison to any of the scheme getting plotted on the left-hand side. Those would be the one which would have lower level of risk. And in similar manner, if a fund gets plotted on the upper end of y-axis, those would be the one having higher level of return in comparison if it gets plotted on the lower end of y-axis. Now, if at all we see, most of the schemes are rather cluttered towards the left-hand side, meaning taking in lower level of risk, but at the same time generating moderate level of return. While there happens to be this specific stock, which is Infosys, taking in higher level of risk and at the same time generating very low return when we compare it to any other scheme that is there in the portfolio. We have also recently launched the plotting of benchmark as well as portfolio onto this scatter plot as well. So we have given different identifier for portfolio as well as benchmark. Followed by risk versus return, what we have is this correlation tab. Now, correlation lets you see how two schemes are similar in terms of their NAV movement. Directional similarity between every two schemes is what we could see right here. For example, I keep my cursor right here on 0.84. On the left, we could see HDFC Midcap Opportunities Fund gets highlighted, and on top, iPro Blue Chip gets highlighted. Now, this basically says that if the NAV of HDFC Midcap goes up, 84% of times the NAV of iPro Blue Chip will also go up in the similar direction. And this is also valid in the opposite scenario, meaning if the NAV of HDFC goes down, 84% of times the NAV of iPro Blue Chip will also go down in the similar direction. Now, correlation ranges from -1 to +1. The more closer it is to +1, the stronger is their correlation. And right here, as I had added gold as a commodity in this portfolio, we could see that gold has nearly inverse relationship with every other fund that is there in the portfolio. So using this correlation tab, you could ensure diversification happens to be there on a portfolio level. Meaning, for example, if we look upon gold that I have added with that of HDFC Midcap that has gotten highlighted on top, it says that if HDFC Midcap Opportunities Fund goes down, gold happens to go up. So if you have gold as a commodity in your portfolio, or for that matter, gold as an ETF in your portfolio, you could ensure the advantage of diversification would be there on your portfolio as well. Now, in this correlations tab, we've also given an option to put in your own custom start date as well. So let's say you wish to analyze the correlation, maybe for the past 1 year, for the past 2 years. You could anytime do that, put in a time period of your choice and simply hit on run. The data gets changed and is shown as per the time period that you have set it. So that is it for the topic related webinar. If anyone has any query, you could either unmute yourself or type down your questions in the chat box.
हेलो
Yes, please go ahead.
मैडम ये कोरिलेशन मैट्रिक्स रिपीट करें ना एक बार.
Sure. Correlation matrix आपको ये बताता है if you consider two funds, how coordinated are the NAV movements of those two funds. For example, in this case, HDFC Midcap and iPro Blue Chip is being highlighted. The correlation between them is 0.86. That means if NAV of HDFC Midcap goes up 86% of the times, iPro Blue Chip Fund's NAV will also go up in the same direction. Please note, this does not speak anything about the magnitude of change. It just says how directionally similar are these NAVs, right? So for example, vice versa is also true. If HDFC starts going down, HDFC NAV starts going down, iPro Blue Chip will also go down in the same direction 86% of the times. Similarly, if you now check it for gold in this case, right, commodity, typically equity and equity, right, will have negative correlation, and that is exactly that is being highlighted here. If, for example, equity is going down, as in current scenario, gold, you see, will either have no impact or it will go up, right? That is what is significant by the negative correlation that you see here. Now, please note, this updates on NGEN markets on a basis of daily movement. So mutual funds NAV gets updated daily. Therefore, correlations are also updated on a daily basis. We consider 260 data points a year.
Okay.
All right. There's another question in the chat box. Where can we get past data of gold and securities? So typically, you can download it for commodities from MCX. We have taken examples of from MCX, so you could do that. Typically, if you're looking for onboarding it for, let's say, some other non-standard asset classes, like, let's say, PMS, or for that matter, AIFs, you can either contact their aggregators or typically take it from the manufacturers. But typically, in this case, for commodities, we've used MCX website.
हेलो हेलो
Yes, please go ahead. Yes.
ये AIF इसमें डाल सकते हैं पोर्टफोलियो में अपने, उसके कुछ डेटा मिलते हैं हमारे साइड से इंजन में?
सर, एंजन मार्केट्स पे आपको AIF का
आपका
NAV
वॉइस
नहीं
कट रहा है
मिलेगा,
मुझे।
क्योंकि हमारे पास एक एग्रीगेट
ओके ओके बोलिए।
अभी आ
हाँ
रहा है,
यस हाँ
आवाज आ
आ
रहा है
रहा
अभी?
है।
ओके, सो आई वाज सेइंग, सर, एंजन मार्केट्स पे कंसोलिडेटेड बेसिस पे AIFs का NAV नहीं मिलेगा. यू हैव टू अपलोड इट फ्रॉम योर एंड, राइट? क्योंकि एक जगह पे रेगुलेटरी बॉडी कोई नहीं है उन्हें रेगुलेट करने के लिए. That is why we, as such, at NGEN Markets, do not have a database of AIF for that matter, right? If you have that data, let's say from the manufacturers of AIFs or from some other sources, you can upload that on NGEN Markets. Capability है NGEN Markets पे उसको analyze करने की.
PMS में भी ऐसा ही है, सेम टू सेम?
PMS का सर आपको अंडरलाइन होल्डिंग्स अगर पता हो, फॉर एग्जांपल आपको स्टॉक्स पता हो, PMS में क्या क्या स्टॉक्स है, तो आप वो स्टॉक्स अपलोड कर सकते हो एज अ पोर्टफोलियो.
ओके ओके मैम, थैंक यू.
There's another question in the chat box. Currently, you can access NGEN Markets with one license at a time, right? So with one license, there are no multiple signups that will be allowed. If simultaneously you try to sign in from a different device, when one session is already active, you will automatically be thrown out of your previous session. So with one license, you can access it on one single device. There is another question in the chat box, which says, can you explain the rebalance option? Okay, so to understand rebalance, please understand first that portfolio analytics on our platform runs on a backtesting of current holdings, right? So therefore, this is not transaction reporting or for that matter to calculate profit and loss. Therefore, in a hypothetical scenario, it is always advisable to use fixed weights as a fixed option to do portfolio analytics. What this typically does is, let's say in this case, the start date is 18th of November 2021. At that point of time, each and every security that you hold in the portfolio was equally allocated in the ratio of 16% to every single security. It will work on fixed weights, meaning it will consider daily rebalancing due to changes in the market movements. And it will ensure that this 16.67 weightage is fixed, or rather maintained, to each of those securities along the entire timeline that you're analyzing for. So from 18th of November 2021 to 21st of November 2024, every single day, it is 16.67 weight for every single security in the portfolio. Of course, practically speaking, this isn't possible because of the transaction costs that are involved in actually executing the trade and rebalancing it every single day, right? However, this is recommended if you want to use this for research purposes. if we kind of eliminate the transaction costs from the picture. That being said, of course, we've given some other options. If you click on the drop down of rebalance, you will see there are some other options like monthly rescale, quarterly rescale, annual rescale, or for that matter, leave invested. So you could choose either from either of them. However, as I mentioned earlier also, we on NGEN Markets will definitely recommend to put it as fixed weights, because the purpose of the platform is to do research on this portfolio, not to actually execute transactions. Any more questions? Please do let us know.
Hello,
Yes, please go
am I
ahead.
audible?
Yes.
Yeah, hi Prajakta.
Hello, please go
I
ahead.
I have a question that if we want to give a amount-based allocation to the custom securities to understand and analyze the behavior of a client's existing portfolio, so is amount-based allocation possible?
Typically, what you can do is you can give it in percentage terms, because you can add a security as a component in the portfolio only in the portfolio section, right? Therefore, you can add it in percentage terms. However, when you want to present it, right, to the client, you can convert that into rupee based or amount based using the PPT option, which could generate a PPT in amount based terms, right? You simply click on PPT option and you put in the entire AUM. Let's say amount invested is 20 lakhs. You want to give a proposal of 20 lakhs, for example. You put 20 lakhs there and then generate the PPT. On the PPT screen, the first page, of course, will open up, which will divide the AUM of 20 lakh that was input by you into the ratio of 16.67% each, which will of course be expressed in rupee terms because you've chosen amount based. However, adding of securities has to be done in percentage based manner only as of now, right? So this is what I was mentioning. This is the security. While presenting, you can definitely show. So 20 lakh into 16.67, that comes to 3.33 lakh to each of the securities. So that can definitely be presented.
Okay, thank you.
Okay. So there's another question in the chat box with respect to multiple licenses. Yes, sir, that's definitely possible. You can definitely take multiple licenses for one ARN. We will get you connected with our business head post the webinar session, if that will be okay. Is that fine? All right, just give us time after the webinar. You'll get a call back from our business head. He'll get in touch with you for the additional licenses details along with the costing. Thank you.
There's another question in the chat box. Any extra fees do we need to pay for multiple users?
For additional login details, definitely the multiple users come at a separate pricing. There's an additional cost that requires to be paid. We will ask our business head to get in touch with you for discussing on this shortly after the webinar. Could you please drop in your contact number in the chat box so that the call can be maybe immediate?
Yes, have received the number in the chat box. We'll forward this to the business head. Thank you. There's another question. May I know the license fee?
So this will be separately discussed by the business head on a separate call. Yeah. Any topic related questions, please go ahead. Product related questions, basically. All right, Ansu, if there are no more questions, we can close for today.
Yes. All right. Thank you all for joining in. We have our YouTube page, which has a dedicated playlist for all the webinars that has been conducted up until now. Today's webinar will also get uploaded. A total of 136 webinars have been uploaded now. Thank you all for joining in. Hope to see you again next week with a new topic. Thank you.